Hello friends, welcome to my channel Lucid Inklings. Today our topic for discussion is which interests are tax free. As you all know, if you make some investment, what you get back in return is called interest. Every year while filing your income tax return, you people might have doubt like should I show the interest income in return or TDS has been deducted on deposit income. How can I get it back? What is ATTTA or ATTTB? Or like I have made some investment in tax saving schemes or those interest which I earn from it is tax free like that. Today my video is all about it. Let's watch it till the end. Friends, before going into the details of interest from various deposits, let's have a clear view about tax-free and tax-saving bonds. In case of tax-free bonds, the initial investment which you make is taxable, whereas the interest income you earn every year is tax-free and also TDS is not applicable on it. Tax-free bonds are usually issued by public sector undertakings like National Highway Authority of India, Indian Railways, Rural Electrification Corporation, etc. Whereas tax-saving bonds are the bonds mentioned in ATC, and whatever initial investment you make on it, you will get a deduction under ATC, whereas interest income is taxable in few cases that we'll look at in detail in the further slides. Then tax-free bonds offer higher rates when you compare it with tax-saving bonds because tax-free bonds have higher lock-in period which starts from 10 years, whereas in case of tax-saving bonds you can withdraw your investment after 5 or 7 years. Interest from savings account. You may have savings account in a bank, in a post office or in a cooperative bank, etc. In a year, whatever interest you receive from a savings account must be consolidated and it must be shown in your income tax return under the head income from other sources, and there is a small deduction for the interest you earn from savings account. It is dealt under section 80 TTA. Let's have a look at it. 80 TTA is a section that deals with deduction on interest that you earn from savings bank account, and this section is available only to individual and HUF and not to any other associates like partnership firm or companies, and this section is not applicable to senior citizens. For senior citizen there is a separate section called 80 TTB that we'll see it separately, and the maximum deduction possible under this section is 10,000. For example, if you have number of accounts in a savings bank in a particular bank, or one account in a bank and another account in a post office, in a consolidated manner the maximum deduction possible is 10,000. Whatever you earn in excess of 10,000 is taxable, and whatever income you are earning from SB account should be shown under the head income from other sources. From that 10,000 can be taken as deduction under section 80 TTA and everything else is taxable according to your slab rates. Well guys, in the previous slide we saw about interest from savings bank account. SB account is a flexible one with good liquidity and there are no restrictions regarding withdrawal. But in case of fixed deposit, you cannot withdraw money till a fixed term, and so interest rates are very higher. Whatever interest you earn from fixed deposit is taxable and there is TDS applicability on it. Now let's look into it. 194A deals with TDS on interest. Tax will be deducted at source by the bank at the time they credit the interest to your account and not when the FD matures. For example, if you have a FD for 3 years and the interest will be credited to your account at the end of every year, only at that time TDS will be deducted and not at the end of third year. Now let's see to whom this section of TDS applies to. It applies to a resident. if he is a non-resident, there is a separate section called 195. In this video, I am speaking only about a person who is a resident. And the time of deduction. Time of deduction is when the interest paid or credited exceeds 40,000. This is not related to a particular account. If you have number of FDs in a bank, when the consolidated interest that you earn on FD in a particular year exceeds 40,000, then TDS will be deducted. And this limit is 50,000 in case of senior citizens. And the rate of deduction is 10% if PAN is provided, and if the PAN is not provided, it is 20%. So remember, even if TDS is not deducted, FD interest is fully taxable. So if your interest is 30,000, even then that 30,000 should be shown in your income tax return, and tax must be paid on it according to your slab rates. Then non-deduction. In case in a particular year you know it in advance that your total income is below the taxable limit, then there is no need for you to file your income tax return. But if tax is deducted on fixed deposit, you can get it as refund from government only by filing your income tax return. If you feel this is a lengthy process, you could submit form 15G or 15H to your bank and request them not to deduct TDS. Here I have downloaded form 15G. Let's have a look on it. Friends, this is the format of form 15G. I know it is not clear. You could download it from Google, and it would ask some of your personal information and about your estimated total income. Fill it and submit your bank at the start of your financial year, or else tax will be deducted as per the previous slides, and you could get it as refund only by filing your income tax returns. And if you want to know the total TDS in a particular year, you could open income tax website and log in with your user ID and password. There will be a dashboard as you could see on the slide. Go to my account and click view form 26AS. This form gives the list of income on which tax is deducted in a particular year, and it would open like this. This is how form 26AS looks like, and I'm here showing only the fields which is relevant to a discussion, and you could see the part A, which gives the list of income and the total tax deducted on it, and part A1 says about the income for which the form 15G or 15H is given. You could also check this form in every quarter to plan on advanced tax. Friends, you may remember in the previous slides I mentioned about section 80 TTB. It was introduced as a big relief to senior citizen, and it is applicable only to resident senior citizen. If an NRI comes from some other countries and if he opens an bank account and if he gets some interest on it, this section is not applicable, and the maximum deduction allowable is 50,000. And the income may be from a bank deposit or post office deposit or deposit in a cooperative bank. So if a senior citizen, if he is earning some interest income on his deposit, the allowable deduction is 50,000 under section 80 TTB. So till now we saw about interest from savings bank and fixed deposit. Here is a list of some tax savings schemes mentioned under ATC and its interest taxability. So if you see, interest from Public Provident Fund, Suganya Samriddhi Scheme, National Pension Scheme are not taxable. Even the initial amount that you make investment at the start of the financial year is not taxable as per section ATC. And if you see like interest from National Saving Certificate and Senior Citizen Scheme are taxable, but the initial amount that you make investment under section ATC is not taxable, whereas debenture interest is also taxable. So in the coming days I'll be posting a detailed video on various investment schemes. If you find this video useful, share it to your friends and stay tuned to my channel. Thank you for your time and thanks for watching my video, guys.